like to keep this free form because I'm sure all of y'all have things that you want to talk about yourself. And I'm sure we have plenty of audiences here, but everyone here has had opportunity to hear all of these individuals speak. Most of them spoke about financing and financial sustainability of special economic zones. And now it's kind of an opportunity to synthesize it, as well as to have an engaging conversation of best principles on how to monetize this. So actually, a good way to start would be, based on what y'all have seen of the other speakers, what was some interesting things you've learned about how to monetize and to invest in special economic zones and those types of projects?
Yeah, if I may, because not sure everyone knows, I'm also an investor. I have a VC fund, I'm a solo GP, and my idea was to invest in the apps that can use Prospera to succeed, like a mini circle, for example, or an aerial loop. And what I was really surprised by and struck by, or amazed by, was Dave's talk in describing the kind of fund he's building, which feels like it's basically a bigger version of what I built with my first Infinita, but sort of the idea that you can have a whole startup community and capture part of the real estate, that was very inspiring to me.
Sorry, I forgot your Alex. I was looking at Alex's numbers with all the multipliers on it, and then he said the multipliers are multiplying, and then I got very excited. But I think just listening and hearing the interplay between venture capital and real estate is a common theme today. I'm sure there's also some regulatory issues that are still challenging. And again, just like something that's been puzzling me that I've been trying to learn more about is, why does mortgage finance why is it not so prevalent? I mean, in Africa, I think I can understand why there are structural challenges, but in countries like Mexico and Brazil, which are fairly developed, it's still problematic and not very existent. And so just, what did the US, what did the Europe do, what did other places like Japan do that actually worked? And are there any commonalities there that can be did and, if possible, done on small scale? Like, I don't really want to wait for governments to figure that out. It'd be much easier if you can get smaller entities to be able to do that, and hopefully, private corporations take note.
I think for me, probably the most interesting thing was, I think, something many of us intuitively know, but the failure rate of venture capital investments is, to me, I just think, Dave speaking on that, it really hits home. It's just, these will fail, and that's why it's so important that we have not just Prospera, but we have, tens or 50, 100 plus companies trying to do this. And they're all, versions on the business model that I talked about, but they're all going to have their slight nuances to it. And I think that's really something important to keep in mind. Maybe not put all of our eggs in the same basket, but try to replicate this model in other countries, other locations. So island here, maybe mainland elsewhere, and so on and so forth.
Yeah, it's interesting to talk about the benefits of diversification, which are real, because we had a conversation last night about the benefits of concentration. So there's another idea, which is like Prospera's success so far and success in the future really unlocks a lot of possibility because it proves the model and it assuages doubts. And like having this fund work, it would have a huge effect. And like, not everybody wants to help a company this size. Some of us are like founders who just have to build something and own it ourselves, and there's room for doing that as well. I found Dave's talk really interesting. This interplay between investing in people, investing in their companies, investing in the real estate that they live in. These are each kind of or the model of the charter city of like building real estate and collecting taxes, which is like taking a share of the GDP that's created. It's like these are all different ways of creating economic activity and then capturing some of it. And I think it's really cool that we have this menu of things to use.
But time for the contrarian question. And obviously, everyone here has a little bit of a bias, but there are some unique elements of this industry that may not be as easily transposable as, let's say, an SAS company or other tech startups. Do you think that venture capital is actually an ideal form of financing for these types of projects? Or because of long hold periods, or they need parts of it that might be difficult? And if you do think that it makes sense, what are some elements or some strategies that VCs and other private equity investors can employ in order to make it more realistic with these types of projects?
Okay, well, so it is, I think investing really early stage in these, especially before they have land, is venture-like in that has very high risk and the potential for very high returns, right? If you're investing in early stage software valuation of 2 to 20 million in a company that eventually manages tens of billions of dollars of real estate, that's a great return. That's just like that particular area though. Like you don't want to be funding real estate with equity mostly. You want to be funding it with debt. And so I think that, you know, venture capital may apply well to one part of it, but it's not the best for much of it.
Yeah, I would agree. Check. Yeah, I would agree that, like I said in the slide, venture capital is rocket fuel, and sometimes rockets blow up. And in fact, a lot of times the rockets blow up. So it's not really a panacea for everything. I think there has to be an interplay of debt capital as well. But the challenge with debt capital is usually that those companies have to be of some scale and they have to have had profitability for 2 or 3 years. So if you're trying to create something from scratch, it's difficult to use debt capital to get that off the ground unless you have people supporting it. Whereas with venture, you know it's going to fail a lot, but if you have enough critical mass and enough experiments, some things will work. And then as some of those companies sort of stop or fall off the venture trajectory, you do want debt capital available for small 20-person companies that don't get to 100, or even the small, medium-sized 100-person companies that don't get to IPO. The biggest challenge, I think, is outside large tech urban metros where there's a history of success and success at the largest levels, IPOs. Liquidity is usually a challenge. So even if you're investing in these smaller startups or just normal businesses, getting a return on that investment isn't easy. Even if the business does well and on paper the value increases, unless you're looking at secondary markets or other type of interesting private equity activity on small scale, it's difficult to generate returns. And then if you don't get those returns, you're going to have a tough time getting people to play ball with those experiments.
I think what you're getting at the end there is where I was going with this is the liquidity constraint for VCs is very difficult. And so the time horizon for an investment in a company that doesn't yet have land or law is always longer than you think. Unfortunately, I've been on the receiving side of that. So I think that's one challenge. So probably the most successful company that I would say is roughly in this field is actually financed by some family office capital and some ultra high net worth folks that are interested in the space, and it is about a return. They think they can get that over time, especially with that real estate appreciation. But it is an ideological driven battle as much as anything, because they don't have to show what sort of returns they are to raise their next fund in short order. So I think that's another huge component of this.
I think one thing to be pretty specific about is traditional venture capital investment is looking for a return that's probably 500 to 1,000 basis points above stock market performance. So assuming people think that is 8 to 10%, which might be unrealistic, venture capital perform at least at 12 to 15%, ideally more like 15 to 20%. And that's very difficult, particularly in maybe a non-tech market. If, on the other hand, that you got real estate stakeholders or banks and governments to be kind of like, hey, we're not just looking for the venture capital return, we're looking for the return on the real estate, on job creation, on residential housing, then their return on investment requirement might only be 5 to 7% or potentially even lower. Right? So you just have to not lose money while you're creating economic value in other areas. So that really changes the dynamic for what the expectations are for investors in small startup companies and others.
So that kind of begets a question that's fairly fundamental, and that's about valuation. So as you were mentioning about traditional startups, you're able to determine valuation fairly easily because there is a big market for IPOs and secondary markets, and you can measure those fairly easily. But it seems a lot in the startup society space, there's not a lot of analogs. There's a lot of pointing to a lot of public projects and looking at government studies, but there's not an IPO startup society at this point. If that's the case, how do you approach the question of valuation when making an investment?
I make heavy use of this part of my body right here. I mean, that's just the state of things. I mean, we totally make it up, and it doesn't feel like it's on a very good basis. At this point, we've now seen enough different valuations that we start to have a relative sense of things, right? Like a super early stage company in Africa, probably in the low millions. A project that's coming in with, with a great team, with an MOU, like something much more solid. I've seen valuations in the $10 to $20 million range, and that's kind of that 2 to 20 is what I've mostly seen. But this is a brand new, opaque field that we're just figuring out. And like I don't believe in like spreadsheets and stuff like that for stuff that's super early and super unknown. I think that these multiple numbers are meaningful, right? Like we don't know what the hit rate is, but I think like showing that it is possible if it succeeds to get those huge multiples, like I think that's real. But put a number on it.
Yeah, I think, like Patri said, it's extremely hard. I think mostly it's kind of made up at this point. Where I guess if you've been in the space for, I don't know, 5+ years for me and much longer for Patri, you start to, I guess, see the sort of numbers that he's suggesting as well. One thing that didn't work, I can tell you, is trying to stage it out. We achieved this, and then the value goes to that. And we, in fact, tried to do this at multiple phases, and that wasn't well received by the market. Hard to know if it was because of the valuation or the complication, but I think largely you just sort of know what others in the industry are doing, what's the going rate, and you have to play off that.
Maybe a question to the panel. It seemed to be, just from my impression, and I don't want to brag, but with Vitalia we were able to raise a fundraising round really quick, which made me think that there's a tremendous appetite to projects like that with that kind of a vision in the market. We're even in a bear market. So what is it, I think Patri and I talked about this before, that there's more of a gap with founders willing to take on these projects. So how can we think of how to attract more founders to these kinds of projects? And what do you think the universe is out there of what they could do or should do?
I think this is why I was trying to emphasize
The early stage.
Yeah, well, I think it's easier at the earlier stage to attract people because all you really need is funding, and people will come to funding. But I think to keep those people around, you need to create an environment that's vibrant, that has, food, culture, people, other things that are not just technology. And that's not so easy, especially for a bunch of nerds and venture capitalists. We can be a little bit narrow-minded about what our views of society should be, and you want musicians and teachers and doctors and lots of other parts of society that aren't just a bunch of nerds. And so we probably need to think outside the box and have a more diverse community. And I noticed that right now it's like 4 or 5 white guys up on stage. We should probably have a more diverse set of voices and experiences in putting those communities together. Again, I'm sort of reminded that I don't spend a lot of time in crypto communities, and they are great for passion and motivation, but sometimes it can be a monoculture. And again, unless we're coming up with new ways to have babies, probably we need to have a more diverse set of people if we want to create societies that are going to have more people around. Not to put too fine a point on it.
What's the question again?
Oh, I want to make it more concrete. What are you looking for in a founder? What do you think is a good start for that founder?
Well, I think someone that's probably put some of their own capital at risk is a very important thing. I want some skin in the game. That could be their own financial capital. It also could be that they're taking a major pay cut for working on the project out of a sense of duty and inspiration and wanting to make something bigger than themselves. I certainly think, unfortunately, the answer is you do have to have a team that has the right connections to the right places. If you want to have a project somewhere, you can't. I haven't been able to. Some people tell stories of it. Work your way right up to the top people in the country.
like that. So I actually think that it does make sense to have a wide network. People with the right access is in fact required.
Yeah. When I was making my list for founder attributes early on, that, you know, kind of close connections to a country or region was like one of the things on the list. But I've actually found after these years and, for years now of not following up on those offers to intro me to an interested country, I follow up once or twice a year because I don't have any founders to put on them. So now I kind of don't care because I can, make the interest for them. But, mainly I look for the same things as every other investor looks for and every other founder. And then the sort of more domain-specific skills, to me, it's real estate development and community building. And that community building includes like having a compelling vision for a community, being able to communicate it, herd the cats, and work with people to cultivate that over time. The kind of stuff that makes things like Vitalia and Vitalia work. That's my list.
Yeah, we put out an idea for founders or insights based on limited data, right? So there's space for that long. But what seems to me to be encouraging for any founder who wants to do a startup society to get involved in the country and acculturate it is technology and technology communities. I experienced this here in Honduras and also in Zanzibar. And I'm pretty sure these technology communities exist almost anywhere in the world at a certain stage of development, right? So there is a technology community here in Honduras. They're the ones who have very high upset from this. They're the ones that are relatively acculturated to me, right? They often understand that, they're techno-optimists, they get crypto, right? They're working on their own startups. So there's a lot of, and often most of the time they also speak English. So there's a lot of like similarity there to build on, which makes this kind of natural allies. And then that makes it easier for you to build momentum, involve them in what you're doing, into a future project, and get connections in the country. So I think, and that has to do with, I think that's happened relatively recently, that venture capital and the startups playbooks that were created in Silicon Valley are increasingly more accessible around the world. So maybe that's a very good moment for us, building startup societies.
I think it's kind of weird because, in emerging or developing markets, oftentimes you don't need much more than capital to attract entrepreneur attention. I think in more competitive, environments, it's not just the money. You actually have to do a lot more things to attract founders. So I don't think the real question is sort of like, what do you look for in founders? That, to me, is kind of basic. It's make stuff, sell stuff, encourage people to be awesome. I know that sounds like sort of simple, but like that cruise ship director component is a really important part of it. But ultimately, it's making things and selling things. What I think is challenging is if you're trying to create an interesting community that's not in the middle of an already large, dense tech metro, you really have to do something different and unique. You have to sort of create a lot with a little. So usually you want to try and do one thing different and well. Like, you're not going to try and recreate all of Silicon Valley or all of Singapore or all of Dubai. One thing you could do is, sounds stupid, but hire a really amazing chef or hire 10 really amazing chefs, right? Like, that's actually something that seems very basic, but if you feed people great food and really well, they might hang out with you. And so you kind of got to find your niche, and I think that's an obvious one, but if you're trying to build a community in genetics or life sciences, then you probably want some really smart doctors, researchers, physicians, or maybe there's a tech stack that you're putting together, or maybe you help solve a particular part of the process for, I don't know, FDA approval or something. So, like, you really have to pick your spots, but you have to be as excellent as you possibly can relative to whatever else is out there. You don't have to be amazing across the board. You do need to be sort of T-shaped, I think what people say, is deep in at least one area, or really interesting and attractive in one area.
So, through a lot of this conference, there's been a lot of talk about monetization normally through the real estate strategy. But this Startup Society Summit, it also is about crypto and digital, so it's important to talk about that. Also, when you actually look at most governments in the world, the majority of their revenue is not coming from real estate, it's coming from other sources. and services and what have you. What are some interesting lines of revenue that you think that are not real estate related that you'd like to see in different Startup Society projects?
Well, the opposite. Like the one that I don't want to see, I think, is kind of all of like the government services and corporation, all that. Like fine for it to be a revenue stream, but I just have this real sense that like that's the commodity that should be like relatively like cheap and low friction, and that things like taxes and lands are how you should be kind of mainly monetizing and capturing larger companies.
One interesting thing that they might consider is your large part building a platform for other people to move to the city and live and work. Certainly this concept of taking an ownership piece of any of the companies that want to start up in your community would be another. I guess a little bit hard to call that revenue in all cases, but certainly capital appreciation, nonetheless from that. It's a tricky catch-22. I mean, it's not necessarily obvious that a company that is setting up a platform would be particularly well equipped to find the companies that are going to be successful. But in some ways, it does align those interests. And if you did have, the way I think about it from our cities, if we're just charging a small fee and Apple decides to move in, I'm not really one of these egalitarian types of guys, but I want a little more than $200 from Apple if they're moving in. So taking an ownership piece might be a way to do that.
Focuses on of all the different ways that a group of people can get together and rebuild parts of our civilization that aren't working, which could be education or healthcare or transportation. I'm interested in the ones who are rebuilding governance and institutions.
On the topic of L1s and L2s, so I work in the psychedelic space and often say that no matter if you're a psychedelic biotech company or a gene therapy biotech company, like oftentimes you have all these L2s who are building on top of a corrupt L1 that is the US healthcare system. So I'm really interested in how we can explore new models for healthcare and also the judicial system and other basic forms of infrastructure through startup societies. But what are your guys' thoughts about how viable it is to pilot a new system that might work very well in a startup city or maybe even a startup country to the rest of the world or to just a broader population? And how would that even be done?
So is that specific to healthcare or just general?
It's more of a general question about like, if you're experimenting with a new L1, whatever that happens to be in a startup society, what is the viability and how is that L1 actually brought into society generally, if at all?
Sorry, I'll ask a very stupid question. I don't hang out with these societies, and when people say L1 and L2, I think I don't understand what you're saying. So could you translate that for a non-crypto nerd?
So this is based off of a recent tweet by Vitalia where he compares, let's say, Prospera as a layer one. A layer one in crypto is like Ethereum, for instance, base layer, and then you have like things like Avalanche that are built on top of Ethereum that can move quicker and do things that the layer one can't do. Similarly, Prospera is a governance layer, and you have like Vitalia here that is nimble with maybe.
So how do we create our version of an L1? Is that what the question was?
Yeah, to put it very simply, the metaphor is a layer 2 on Ethereum would be like a company or something that is built on top of the core infrastructure. So the metaphor is like, for example, if you have a biotech company that is built on top of a corrupt healthcare system in mainstream society, and then you have a biotech company that's built on top of a much better healthcare system in a startup society, how would we bring that model into mainstream society? Does that make sense? Or?
Yeah, I'll try and then hand off to somebody else. So I think people talk a lot about healthcare being busted or broken. I think my definition of that is we're generally paying for symptomatic treatment, not for long-term beneficial living. And so the way to do that would be to flip the model around. Instead of paying doctors to perform symptomatic treatment, is to pay them money when you're healthy and then debit them when you need treatment. And so if you want to do that, actually this is true for both doctors and educators, you should create an asset class which is based on personal income futures, and then give doctors and teachers a portion of your future income or earnings. And that can be done on an individual basis or on an aggregate basis. But you're paying right now for fixing things that go wrong, and then it just incentivizes people to let more things go wrong so that they can make more money fixing them, as opposed to, hey, I want to actually increase the value of human society by keeping them healthy and not having to treat them. So you charge the doctors for treatment. Anyway, one philosophy on how to flip things around.
Okay, so building better L1s can help fix existing corrupt L1s. First, you give them incentive to fix by threatening to take all of their customers, having people move to your startup society. And then second, you show them a different way of doing things with this proof of concept that it works. I like the Hong Kong, Shenzhen, China example. So Hong Kong sucked more and more capital and people from China, and it also showed the benefits of free markets, created a lot of like cultural knowledge about how to do business, and then, you know, thanks to Deng, China adopted some of those policies and liberalized. So the threat of competition and then the proof of concept. But I don't know, but I also wouldn't count on changing corrupt systems. That's why we build new L1s, it's because fixing things is hard.
Oh, we got one more question. Oh, sorry.
Thank you for doing amazing.
Yeah.
Very bizarre.
The limited out to me.
What Patri said at the end, I think, is something that we need to keep in mind. Most people don't necessarily want the system changed. They're not aware of it. And so I think you can, of course, try to attract their customers. You can also drain their monetary coffers. You can also show them that it works. And I think we shouldn't underestimate the value of a good story and how it does work and is not so scary to try things new. And so those might change some minds. But I think we also need to be realistic that most people probably don't want a change in the system, and we need to be okay with that. We want to provide something for the people that do.
Maybe one thing also to say, like the purpose of the L1s and the L2s is typically the apps, right? So the stuff that's built on top. So I feel that the bottleneck there is not as strong as creating new L1s, right? Because as a startup, your risk profile is actually ideal to build things elsewhere than, say, the United States or many other broken layer ones, because you want to hit very big, right? And even though the risk is very high to you that you fail already. So some of the startups that are here, like Minicircle or my own fund, Infinita, or that's a huge value add to their story that we're doing something different that could potentially be a 10x advantage to you, right? So I think we could right now, this year, have 100, 200 more startups, apps that build on existing layer 1s or layer 2s.
I'll go ahead with the last question. You mentioned, you noticed the lack of diversity, and my question is, Vitalia a couple of years ago mentioned that the way to bridge the gender gap is through create artificial wombs. Now, I don't think necessarily that's probably one of the main reasons, but definitely could help. I would like to know from you and all of you, what do you think is really the problem with the society of not having women leaders in institutions and every of the industries?
Pull up. She went to that question.
I like you. I think one of the number one issues is education. We've been educated to be quiet and stay quiet and to really be, we come really for 50, 100 years to really be someone's property. I have a man's last name, and I just wonder why. I seek around the world for leaders in the spiritual, religious, government, and I find few women leaders, but never the top leaders. even between biohackers, researchers, my voice is always kind of like, not necessarily the best. Even if I have great ideas or I notice a certain important issues, if a man says it, it has status, but if I say it, that is not being taken into consideration. And sometimes I just wonder why. And I can totally understand why women are more emotional, and perhaps we tend to be more empathic or have a certain specific characteristic. I'm generalizing. But I just would like to know if it's possible in a man-led world to be able to create systems, educations, and support to be able to have that sit on the stage.
One thing I'll say is that, in theory at least, that answer to questions about how to, like the general question of there's something that I think is not working about society and something that I think should work differently, is startup societies are kind of an answer to that, which is that having a different allocation of roles, different balance of power between men and women makes for a better, more attractive society. Then that's a competitive advantage that you can start a startup society around and actually show it and outcompete other places. But then I don't want to be naive and think, but doing that, you are still within the existing world with all the biases that it has, and you still do have to fight them to some degree. But like, it's at least a situation where if a new way of organizing people is better, then you get to try it. We're all about, like, these new societies may try really radical things. I mean, completely different regulatory system, like, is pretty radical. Like, when I put the mission of the Seed Institute, it was like to build autonomous ocean communities to experiment with new political, social, and legal systems. So, I tend to focus on the legal because there's the clearest, like, economic drivers. But to me, part of the idea of startup societies is also to try, like, all kinds of other changes.
I don't think I have much to add to it. I mean, I think that I'm in the space because I think that is possible, but I'm not necessarily able to add much more beyond that.
No, I just wanted to say I'm ready for the fight, whatever that is, and that's why I'm here. And I always felt even the blockchain space and Vitalia and these kind of initiatives help us to give a voice for these problems. Thank you.